all want to make more money and make it faster. For most wage-earning employees, that can be really tough to do. Chances are you're working for someone else. From time to time, sure, you may get an occasional raise, but you're not really doing any better off financially. For a majority of you, a raise may seem like it's just enough to cover the cost of living increases. Every year, you may find yourself making more money than the year before, but still can't figure out why it's not translating into greater financial freedom. If you're ready for that financial freedom, then it's time to take greater control of your finances and open the door to potentially keeping more of the money that you make. It's time to create a business. In this lesson, you will learn tax benefits of operating as a business, some of the main tax strategies available to businesses, and how to increase your wealth by reducing your tax bill. Let's start out with a quick look at the possibility of starting your own business. The potential for starting your own business really depends on what your current job situation looks like. For example, if you're the COO of someone else's company, you're probably not going to be able to create your own business and keep that job. While you could potentially have that company treat you as an independent contractor and file a 1099, it may be a challenge. If you're making crafts at home and selling them online, part-timing as a computer repair service, a full-time trader, or an aspiring chef, starting your own business makes a lot of sense. There are so many tax breaks and opportunities to save money when going from working a 9-to-5 job for someone else to creating a business and working for yourself. In today's economy, there are two familiar ways in which people build wealth. First, you have your typical 9-to-5ers. You put in your time, your earnings are taxed before you even see them, and whatever is left after Uncle Sam takes his share is yours to keep. You get a W-2 in January that shows you all the federal and state income taxes, Medicare, Social Security, and other deductions that you paid that year. You then begin the process of working through a limited number of deductions to get as much of that money back as you can when you file your tax return. The other familiar way in which people build wealth is by starting and running their own business. They do things different. Business owners enjoy tax benefits that are not available to non-business owners. Like an employee, they earn first, but then get to deduct business expenses from those earnings before the government gets to tax them. This means more money for the business owners in the end. The IRS offers generous tax deductions for business owners, and owners are taxed on their earnings only after they have paid everything they need to keep their business going and growing.